Welcome. I'm Diana Harvey.
I'm Elizabeth Hull.
I'm Cindy Walker.
And I'm Stacey Van Schenck.
We are Mortgage Chicks with hot tips. Today's topic is a really important one to people in Florida, flood insurance. But interestingly enough, the Mortgage Chicks had more questions than answers. So we decided we better bring in a pro.
I have had the pleasure of working with this lady for a decade, and she is incredible. May I introduce Lindsey O'Donnell with Florida Best Quote. Lindsey, there have been some crazy rumors about what's going on with the flood insurance as of October 1. I've heard something about a 2.0 risk factor. Can you tell me what that means?
Yeah, absolutely. I'd be happy to. And thank you so much for having me here today. There's definitely a lot of buzz about flood insurance right now and a lot of information out there. So happy to be talking about this with you. Just to give a quick background on what we're talking about, it's Risk Rating 2.0 that is coming out, that came out effective October 1st of this year. And it's being put out by the National Flood Insurance Program, which is our government-backed flood insurance carrier. Also, you may hear them referred to as FEMA. FEMA runs them, FEMA controls it all. They've been using the same rate since 1975. So it's been very outdated information. We've been working on trying to figure out, or they've been working on trying to figure out ways to bring us into the 21st century as far as rating factors go with flood insurance. FEMA has been in debt since at least Katrina. Following Katrina, they were about $20 billion in debt. So since that time, they've just been trying to figure out ways to get out of debt and to try and improve the program. If everyone remembers back in 2012, when Biggert Waters Act came out, that was when we all had those premiums go from...
What a mess that was.
Yeah. All those premiums went from $1,500
So this 2.0
to
is not
$40,000.
better.
There's a lot of, it's different. We'll go with it's very different. So they attempted to make some changes with the Biggert Waters Act in 2012, and that obviously didn't go very well. They adjusted that in 2014, and since then we've just been going year to year, month to month, trying to figure out what they would come out with next. So Risk Rating 2.0 is essentially an entirely new rating system for National Flood Insurance Program policies. So they're changing the script completely, changing everything the way that it works. In the past, when you had a flood insurance policy go through the NFIP, they would only look at the flood zone and the amount of coverage on the home was how they would do the rating factors. Now what we're going to do is take into account more of the private sector factors for rating these policies. So we're going to look at a lot more variables to try and figure out the proper flood insurance rate for all of the homes across the country.
So, Lindsey, then when is this going to take effect and with the policyholders, and how is this going to be different from what we're currently looking at?
So for anyone getting a new policy in place, the rate changes will be effective October 1st. So we've already seen these new rates come out for some new purchases. For anyone who currently has a policy in place and they're going to be renewing, those renewal rates will not come out until April 1st. So anyone
2022. So they've got a little bit of
time, and what's going to happen is, so for new policies, effective immediately, you see those rates. So if you're building a house, if you're buying a house, you have to get your new flood insurance rate right now based on 2.0 if you stay with the National Flood Insurance Program. April 1st, 2022, if you have a policy renewing, what will happen is they're going to have a glide path of rate increases for those homeowners. So you'll see probably an average of a 15% to 18% rate increase until you reach your new Risk Rating 2.0 premium. So if you're currently paying $2,000 and your new rate is $4,000, they'll put you on that glide path. Every year your premium will increase a maximum of 18% until you got to that $4,000 premium.
So roughly 5.5-ish years to get to the max cap.
Correct. And the good news with this part of it is that in the past, we've seen rate increases of 25% every year on some policyholders. I mean, we've got policyholders paying $6,000, $7,000 and they haven't addressed it in a few years. With this new program, now we know what our final rate will be. So instead of it just continuing to increase year over
Much
year.
better than last time.
Yes,
Right.
They
At
just got
least we
slammed
know.
last
Right.
time.
Yes.
Right.
At least we know where you'll end up and what you're looking at.
Right.
Now, the other side of this that's really good news is the private market. The private market is going to play a huge factor. As of right now, the National Flood Insurance Program insures about, I believe it's roughly 90% of the homes in the state of Florida. Moving forward, that is going to change drastically. A lot of these homeowners are going to move into the private sector. Private market rates are going to become much more competitive than a lot of these National Flood Insurance Program rates are. And that's what we're starting to see so far with the rates that are coming out and our quotes that we're doing as of October 1st. So as far as how is this different from the current system, as I mentioned, currently you're just getting rated if you're in a flood zone or you're not. With the new system, we're going to be taking a lot more information into account as far as the variables that are going into it.
What can the average policyholder expect from all these changes?
Prior to August, when we were given this information, they said that about 80% of policyholders would see a premium increase of $20 or less monthly. What we found since then is that they were looking at current policyholders and what they would expect in the next year. We weren't looking at what they'll expect 5 years down the road when they get to their full risk rate.
I was going to say that sounds too good to be
It
true.
also, yes, it also was taking into account all of Florida and Pinellas County, Tampa. Our areas are coastal.
Special.
We're surrounded by water. We're low lying. So our rate increases, we're going to feel a bit more and we're going to see them a bit more as far as our homeowners and what we're going to see there. What we need to keep in mind is with these new factors that will be taken into account, the new variables that will be taken into account with rates. It will be the distance to a flooding source, how far away you are. So if someone's right on the beach, they'll be receiving a different rate than someone who's in inland Tampa where drainage is poor and they're in a flood zone. They'll be taking into account the type of flooding source. So whether it's the ocean, a lake, a river, whatever water source it is that would be causing this damage will impact your rates. They're also now going to be taking into account structural relative elevation. So previously, we would use elevation certificates to determine the exact elevation of the slab or first floor of the house compared to where FEMA is determining flooding would occur, which was also referred to as base flood elevation. Now they're going to use information from the private sector and determine a relative elevation. So the good news here is we no longer need an elevation certificate in order to get a quote. So that's good. Now we can get a premium pretty quickly. If we're in a rush, we don't have to go search that information down.
Yeah, because that always took at least 2 days to order an elevation certificate. And as we get busier and busier, sometimes it was a week. So that is great to hear.
That was before. Now it probably can take
Yeah,
3 weeks
exactly.
to get an elevation certificate.
Yeah.
Can't wait that long.
So that's a bit of good news. So what they'll do instead is they'll ask us some information about the house itself. Is it on slab? Is it built up on a garage? How many steps to get into the house? Is there living space on the first floor? Is it the second floor? To figure out the relative elevation of the first floor of living space. So this makes it easier. I can get a quote for you much faster. The thing that we're seeing, however, is in the past where you would use that elevation certificate information, and as long as the house was built up and built properly, the NFIP rates were very competitive. You might be paying $500 because the extra money was spent to build that house up. Now what we're seeing is that if the ground elevation is low, even if the house is built up, the rates are coming back pretty high.
Oh,
So
that's a shame.
Wow.
That's where it's getting tough with the NFIP. The thing to always keep in mind is that the private market is very different and is rating differently, and a lot of times we're finding a competitive rate with them. So
are they going to take into account if a house is built on stilts also, or no? They're just going to be more competitive because of...
they will take some of the carriers will take that into account. Every private market carrier is slightly different with the way that they rate. Some of them will take elevation certificate information, some of them will not, but they'll take if it's built up, if it's not, they'll look at the elevation of the ground. So it just kind of depends. The biggest thing that I say with the private market is just making sure you have a lot of options. So
Yes.
at Florida Best Quote, we have 15 private market carriers we shop through, and it's really hard to figure out what one is going to be the most competitive in different scenarios. So we go through all of them and we check and see to make sure we're finding the best rate. So the biggest thing that a homeowner can do right now is just shop your coverage. Make sure you're shopping through an agent who has access to a lot of
For
private
sure.
market options and knows how to check them all, and also understands the new process and the new system well. Because we can still use an elevation certificate with the NFIP. It's just not providing the same level of savings as it was before. For example, I have one client who was paying $3,000 with their elevation certificate, and now they've actually been moved out of a flood zone, and still with their elevation certificate in an X flood zone, they're paying $3,500, which I can't really wrap my brain around. But it's so, we can take the elevation certificate information into account, but it's not always going to make a
Now,
big
I have
difference.
a question about the X zone, because in some properties, you will have part of the property in a flood zone, but the structure itself is not. Will properties like that be affected?
As far as, so what I've been trying to talk about a lot as well with the flood zones is with this new rating factor, the National Flood Insurance Program is no longer taking flood zones into account. With the question you're asking, that impacts the mortgage requirement for flood insurance. So the mandatory purchase requirement. If that flood zone touches the structure, flood insurance is still required. If it does not touch a structure,
So
flood
that
insurance
hasn't
is not
changed
required.
in any way.
Thank
That is staying the
Fantastic.
same.
Okay.
That is staying the same.
Another good
the one,
point.
yeah.
Yes.
The one thing that we are seeing with that is if you do have a house where they're not in a flood zone, it's flood zone X, but let's say they're close to it, they're from out of state, want to make sure that their house is properly insured and protected, so they want to look into a
gonna be
flood
more
insurance
expensive.
policy. In the past, we had set rates, set premiums. The highest amount was about $575 a year. Now those rates are all over the place. So another thing that I've just been informing a lot of realtors that I talk to and lenders is to just try and have the conversation up front and explain to buyers the rate may seem high, just make sure we shop around. Let's check the private market. This is what's going on with the National Flood Insurance Program. The rates are outrageous in some places as of right now. That doesn't necessarily mean that your house is more or less likely to flood. However, we can just, let's check these options as well and see if there's something better or something more competitive.
So let me just ask this off the cuff. What's the chances of this 2.0 changing down the road, just like the last policy that went into effect?
I mean, potentially very good chances. I would say there's already been bills being sent up to Congress to try and ask them to delay the implementation of this. If you remember, Bigger Waters Act
Right,
went
kept
into
getting
effect.
delayed.
It was,
Yep,
it
and
got
then
delayed
they-
about 3 months after
It came
came
out
in.
it was released in October 1 of 13, and I can't remember exactly how long it was, but they stopped it shortly after that, probably
Right.
about a month or two after that. And then they came out with an adjustment in March of 2014.
But not before giving a lot of people some major heart attacks.
Yes, yeah. I think
Myself
we had
included.
one homeowner whose rate went to $40,000. That
Yeah.
was, I mean, and you can only get $250,000 of coverage through FEMA, so it was a mess. So there is a good chance that this could be adjusted as they start to see the rates come out, the effects that it has on people. I mean, they did do an affordability study and look at the country as a whole and how this would impact everyone, but I don't necessarily think they saw the full picture for what it would do for a place like Pinellas County.
Right.
Right.
Who's now suddenly paying the premium for pretty much the rest of the country as far as flood insurance goes.
So Lindsay, a question. I know in the past I've heard that there can be issues if a property had a previous claim. How's that going to affect things now?
That is going to make a big difference now. Thank you for asking that. So one of the other factors that we're going to start taking into account is prior losses, flooding frequency. Now this gets a little confusing, so let me try and explain it the best way I can. Previously, the only time that prior flood losses affected your premium was if you were considered a severe repetitive loss property. You had to have at least 2 claims in a certain amount of time over a certain amount. They've never, having 1 prior flood loss or 2 in 20 years has never impacted a rate, but moving forward, from here on out, if a homeowner files a flood insurance claim, that first claim is not going to impact them. However, it is then going to trigger prior loss history in their risk rating, in their rating factors. So what will happen is, let's say someone has a flood claim November 1st of this year, and they file that claim will not change their rates. However, FEMA will then take a look at a 20-year rolling history of the flood losses on the property. It will go back 20 years, rolling history. So if there's been any prior losses on the home, even before the current owner owned it, that will impact their rates moving forward.
So is that just if they actually had a loss? I mean, what if somebody filed a claim and then later said, "Oh, well, we never mind."
Once you file a claim with the carrier and call the carrier, it's a claim.
It's a
ding.
claim.
Yeah,
Wow.
you're
Okay.
not allowed to
So that's
retract that.
that's something to know too.
Yes, so I would always recommend if you do have a claim, you're unsure whether to call, call your agent before calling the carrier. And this is also a big reason for working with an
Smart.
independent agent, someone local, someone you can talk to, pick up the phone and ask, should I call my carrier or should I not?
So then we don't let you be their personal shopper.
Yes, absolutely.
And call you before anything.
Right, yes, please, definitely before calling carriers.
Now, what if someone elects to drop their flood insurance and then changes their mind and wants to go and get it again? Having that lapse of no coverage, does that have any impact? Because I've heard both ways.
With the new risk rating factors, in the past it would have a bigger impact because we had things like grandfathering. One of the things that's happening with risk rating 2.0 is they're getting rid of grandfathering altogether. So you're no longer getting a better rate for having prior coverage. So the biggest impact that letting it lapse and coming back will have on you is whatever your rate was, if you were going to be on that glide path moving forward, once you go back in, you're going to get the brand new rates. So you'll no longer get that break of a few years, 5
Ability
years to
to
get
get
up
to
to your
that
rate.
point,
Right.
okay.
You'll have to get back in at the full risk rating factors, which could be a pretty high premium increase.
Yeah.
However, that's the big thing here as well, is getting rid of grandfathering is going to impact a lot of homeowners who have been receiving better rates for their house being built to prior codes, and now moving forward, they're just going to have to go towards those new rates as well.
Wow.
The last thing that will be taken into account with this is the cost to rebuild. So previously, your $150,000 house would receive the same premiums as your $1.5 million home. Now they're going to get a higher risk rating factor for that $1.5 million home and a lower one for that $150,000 home. So this also means that our houses on the beach, our high value homes near the water, they're going to see significant rate increases. And where this is becoming problematic is a lot of these homeowners spent a lot of money building their houses to code.
Right.
Yeah.
The county or city told them you need to be at this elevation, and as long as you do, you'll be in good shape. Now they're going to get these new risk rating. I mean, we've got people who are under contract on new builds right now
Right.
who received estimates for premiums before they started construction, and those rates are changing,
Quite
and
different.
there's no
Oh,
glide
wow.
path for that.
Wow.
And
So,
you can see where the challenge is going to be.
yes.
Wow.
Now again, I know this all sounds a little dismal, but keep in mind that the private market has been around since 2012. It's been doing nothing but improving practices, gaining more information, more flooding information about how everything's working, and their rates have been becoming more stable over the years. So the private market is, I think, where we've had those 90% of homeowners with the NFIP moving forward.
Wow.
A good majority of those are going to move to the private market in the next few years. And hopefully this will also help to grow the private
Competition
market.
for
Yeah, bring in more
NFIP.
competition. It's, the government controls this program and we're stuck with whatever they determine. So the private market is our way to get that competition out there and keep those rates competitive.
Awesome.
Sure.
So it sounds to me like the hot tip for this one, ladies, is to shop. I think we all like that. And to shop early and get those rate quotes right away.
Yes, definitely. There are a lot of guidelines with flood insurance, especially through the National Flood Insurance Program. There's a 30-day wait if you don't have prior coverage through them. In the private market, there are some waiting periods. So if you're looking at your home, if you're looking to purchase a new home, definitely get those rates immediately, take a look at it. Because also the one thing that is staying the same is if you're buying a home in a flood zone and the homeowner currently has a National Flood Insurance Program policy, you can still assume that. So if you're looking to buy a home in a flood zone, my recommendation is to check with the seller and find out what they're paying for flood. That way you can assume that policy and then get the benefit of
The
that
glide path. Yeah.
But only
Well,
if
that's
you're buying
encouraging.
as a primary residence.
If
You can't assume a policy if it's going to be an
You
investment
can still.
property or second home.
you still can.
You can.
Yes.
That's
I was
encouraging.
told otherwise.
Well,
So-
and
so
just
you-
quickly, the difference between grandfathering and assuming.
Yes.
Just so, because I always thought they were one and the same, kind of.
Good question.
Yes.
They're not one and the same.
Okay.
So grandfathering was something that we had in place previously where if you had built a home to code at the time of construction, then you could be grandfathered into that rate, essentially. If you built it in 2005, based on what the maps were at that time, you were grandfathered into that rate, even if the rating changed. If the flood zone changed, if the base flood elevation changed, you
Got
could
it.
still get that rate because you built a code at that time. They also had grandfathering for continuous coverage, which meant that as long as a National Flood Insurance Program policy was in place on the home, then you could keep using that same rating factor that policy in place had, and that would apply to a new buyer if they assumed the policy, which is a little different. That's where it can get a little confusing. But as long as you kept that policy in place through all owners who have the property, you can keep those rating factors in place. With assuming a flood policy, essentially all you're doing is you've got a flood policy in place, you change the name on the policy. So seller has their name on it now. If a buyer is going to assume it, they're just changing the name to the buyer's name. So that we can still do. The one difference now is that you are taking over that policy, but you're no longer going to get to keep their grandfathered rates. You're going to go from their grandfathered rating factor on that glide path up to your new risk rating premium.
So
Would
that was
anyone
great.
have a reduction in their flood insurance? I mean, instead of being doom and gloom, like everyone's gonna have this massive increase in flood, could people see a decrease?
Absolutely. What we're seeing is in a lot of areas. Good question.
Good news.
We're seeing in a lot of areas where you have high ground levels, essentially. So inland Pinellas County, inland Tampa, where previously you were getting the same premiums as someone right on the coast. Now, if you do live on a higher elevation, those rates are going down. We are having situations where someone may have been paying, based on the year of the home, they were getting a subsidized premium, so they were paying about $2,500. Now their new premium might be about $1,400.
Nice.
Also, those homeowners who are non-primary in investment properties, where you were getting that 25% rate increase every year because it was not a primary.
Right.
Now we know what your full risk rating factor is, so you'll no longer see those 25% rate increases on those homes once they get to their full risk rating factor.
Okay.
So if you happen to be, let's say, in Pinellas Park, where the elevation can be a little bit higher in areas, then you might see a significant premium reduction. So there are definitely spots where it will be good. Areas of the state that are not coastal will see rate improvements. There will definitely be a lot of that.
And I actually have a client who went from a flood zone to a non-flood zone. She was
My
in
own
an
house
A,
did.
and
Nice.
they turned her into an X. So she doesn't even really have to carry flood insurance anymore.
Yeah, so that's actually, and this is all kind of getting lumped together. We've had a lot of changes coming around in 2021 with flood. We did also just have all new coastal maps come out. So FEMA went around and basically did a whole new study to update all the maps. You know, previously when the maps were in place, they were using all the technology from 1975, all the information from that time frame, and not using new data points, new systems. So they actually just did a whole new coastal study of all of our coastal communities and put out new maps. For Pinellas County, those maps were effective in August. And for Hillsborough County, those maps are about to come out and be effective. So we're having a lot of zone changes as well. And now again, the flood zones still matter for mandatory purchase requirements. So like you said, if they went from A to X, then flood insurance is not required by a lender. However, if they went from X to A and it's now required by a lender, that flood zone no longer is a part of their rating factor with FEMA, which is the difference. They're no longer saying you're in an A zone, you're in a V zone, this is your rate. It's looking at all of those other variables to figure out your premium,
Right.
which is also why our X zone rates are now changing. So you're not required to carry a flood policy in an X zone, but if you choose to, you might see
You're going to be lumped in with
different
everybody
premiums than you would have
else.
expected. Yes. So in Pasco, so the new maps in Pinellas County came out this summer. Hillsborough come out in November, and Pasco County's rates actually new maps. Pasco County's new maps actually came out in July. It was either June or July of 2020.
Nice.
So
Nice.
those maps have been in place for a little bit. We've seen those changes already.
So we are very, very fortunate to have knowledgeable people like you as part of our
part of our
resources.
team.
Yes.
There's definitely a lot going on. It's a lot of
A lot.
information.
And thank you so much for all the information you've given us today. And Lindsay, if any of you would like to talk to Lindsay, have questions of your own, please feel free. Her number and all her contact information will be right here on our podcast. Please reach out. Like we said, the hot tip, shop and shop soon.
Thank you all for joining us today, and stay tuned next week for another hot tip with the mortgage chicks.